One of the things that I had to learn the hard way was when to let go of certain things. And if I had looked at the data the right way, right? If I had looked at it the right way, then it would have been yelling at me. It would have been screaming at me, hey, cut the ties now. Don't allow this to sink your ship, right? Which is what we're going to be talking about today. Every now and then inside of our business, there are things that are happening that we may not be aware of because we're worried about the shiny object. So these little things can add up over time. All right. We don't want to have these leaks and you see us just rowing as fast as we can, because a lot of times we think we can get across the lake, man. We can get across the river. The leak, it can hold out. I'll just make it to the other side and then I'll fix it later. Now, many of you may have heard of stories. Many of you may have served before and know that very small leaks can still sink the greatest of ships, no matter how big your company is. Think about some big names, like if you guys remember Enron, right? If you guys remember Toys R Us, Bed Bath & Beyond wasn't even that long ago. All of them are out of business now because of something that sunk the ship, right? So Benjamin Franklin has a quote that I love, right? It says, beware of little expenses, for a small leak will sink a great ship. And that's what we're going to focus on, right? We're going to focus on where are these small leaks? How can we identify them and how can we plug them? And there's a lot of these companies that may be doing 10 million in revenue, 5 million, 7 million in revenue, but they feel stagnant, like they're not going anywhere. And it's these little ankle biters that cause more damage than you might think, okay? So what's the number one rule of money? We don't want to lose money. It doesn't even matter if it's the small leaks, guys. We don't want to lose money at all. Number 2 rule, don't forget rule number 1. It's that simple. That's it. That's all we need to focus on, okay? So here's an example of what a big leak could look like. All right, these are just examples. But if you had a major decline in purchases or in revenue, and that all happened in one day or in 1 week, that's a big expense. Okay, that's a big expense. We're going to see that very quickly. We're going to look at it and be like, holy crap, what happened? But what about the small ones? So check this out. A 1% decline, a 1% decline in revenue every single day can lead to a 50% decline in 2.5 months. All right, we can obviously expand this as well. We can not say every day. What if it's every week? What if it's 1% every month? Over time, it can make a massive decline. And if you guys remember, you know what Warren Buffett says, when he talks about losing money, don't lose money. Why? It's because, guys, if we lose 50%, we're going to have to make 100% to get that back. Does that make sense? Right? So if we have $100, we lose 50, we're stuck with 50. We have to now make that 50 grow 100% to get back to 100. So we don't want these small leaks at all inside of our company. So what are the 3 most common leak sources? It's these 3: overpaying for too long, not checking your metrics, not being aware of it, and bottom line, a lot of it comes to lack of efficiency. And I know we hate to hear that because we got to where we are today. We got to be pretty efficient human beings, right? Well, let's jump into these here. So what can you overpay for or overpay on? Big one right here up top, guys, is debt. So I see we got a lot of different industries here. How many of you, just type a 1 in the chat, how many of you like to use debt to finance your company? Now, it's a really popular thing inside of real estate. It is. Other service-based businesses, I see some coaching companies in here, maybe not so much. Landscape and clearing. Yep. Yeah, obviously we need new equipment, right? Maybe we need staff, a truck, whatever it is. But oftentimes we never ask the question, can we really afford the debt? And oftentimes, most entrepreneurs, let's say our cash leak, one of the primary components is interest payments. And it's a sneaky son of a gun because when we think about, you know what, I can make $100. All I need to do is borrow $100. I should be good. But in reality, we don't actually analyze the break even. We don't analyze the impact of the interest on everything else. And understanding that how is debt affecting cash flow? Because debt, guys, remember, interest doesn't show up on interest does Interest shows up on our profit and loss statement, so it affects how much our taxable income is. But what about the principal? The principal of that payment does not show up there, right? Even Corinne, and I apologize if I pronounced that wrong. I believe it's Corinne, but even she says the interest is killing you. We in the same boat. It's killing everybody. Not to mention all these hikes in interest rates, right? So debt is something that I highly encourage everybody to take a much deeper look into, and we can talk about that towards the end if you guys are interested specifically. Other things are, oh, got it. I got it right the first time. Yeah, it's hard because, when you look at my last name, nobody gets it right the first time. So no worries, no worries there. All right, so let's talk about reoccurring expenses, guys. This is real simple. Just like Netflix, there is a phenomenon where people or companies will charge you a very small amount so you do forget it. And it doesn't become super relevant. For anybody who's around my age, you might remember the Men's Health magazine phenomenon. Everybody signed up and it just stayed on there for years. And like, I'm still paying for this, right? So the idea is always reviewing our subscriptions because a lot of them are just no longer valid. We're not using them anymore, so why are we paying for them? All right, delayed tax payments. How many in here have never been late on filing taxes? Put a 1 in the chat if you've never been late on filing taxes. I'm gonna let that sink in. I'm gonna be very interested if I see any 1s inside that. Oh, okay, Corinne, back at it. There we go. Hey, so you are one of the, like the Marines, you're one of the few and the proud, okay? Great job for being able to actually handle that. Most people don't do that. Why? Because it's an afterthought. I don't need to pay taxes if I can still operate and hey, David, same thing. I don't want to go to jail. Thank you for saying that, right? And you're scared of the IRS, rightfully so, rightfully so. There are so many entrepreneurs who kind of treat it as an afterthought. Hey, we're not going to deal with it. But they don't realize that regardless of the tax payment itself, there's penalties being stacked on consistently. Those penalties are small leaks that people are not aware of. That stuff adds up. Even if you have your taxes on a payment plan, there's still interest and potential penalties being put onto that. So that's another big one. Scope creep, guys, that's just saying, hey, look, I bought this property. I expected to spend $50,000 in renovation. I ended up spending $60,000 or $70,000. All of us kind of have that same thing, no matter what the industry is. We expect to spend a certain amount and then it creeps up. So we need to monitor that to see why it's creeping up and then adjust our pricing accordingly. Lifestyle creep. We all familiar with this, right? Hey, we start making more money. You know what? I've always wanted that Cybertruck, or I always wanted that new computer. So let's do it. This happens in business too. This happens in business more often than you might think. Think about all the beautiful things that most of us want as entrepreneurs. We want the business to be self-sustaining. We want a staff. We want a team that can do most of the work. We would like to spend more time with our family and get more cash flow. Oftentimes when we get more cash flow, what do? We start building that dream. We start hiring employees. We start doing things that we wouldn't have done if we did not have the excess cash. Unfortunately, for most people, it's still done a bit prematurely. Just because you see the cash doesn't mean that it's time to spend it. So lifestyle creep within the business is a very real thing. And we talked about employees and staff, and then no collections on client poor performance, meaning if they don't pay on time, are we charging the late fees? Are we charging the non-sufficient funds fee? Those small things, although they are costing you, it's an opportunity cost, but it may not necessarily be cost out of your pocket immediately. This is lost revenue.